Welcome back to another episode of Chip Stock Investor. We wanted to get a quick video out on one of our core portfolio holdings that we've never actually done a dedicated video for, Visa. What we think is a platinum standard for cloud and enterprise computing stocks. We'll explain why we like this business model, why it's worked so well, a brief update on its latest quarterly earnings, and what we think a fair value expectation is for the business right now, given the current stock price. A little plug here for our cybersecurity industry flow manual. If you have not seen that video or checked out that manual, which you can find over on our Ko-fi shop, this is a slide that we shared, and this is the dark side of Visa, the digitalization of everything, including money. Tens of millions of people every year affected by cybercrime. And oftentimes that involves the digital movement of money itself. Because of the anonymity of the internet and the ease of transferring money, thanks to Visa's large network, it can unfortunately be easier than ever to fall victim to cybercrime. But it's a big market unto itself. We'll talk a little bit about how Visa also plays in the cybersecurity space as well. Here's another slide that we've borrowed from our cybersecurity industry flow and just simply renamed it the IT infrastructure flow, because the actual hardware that gets installed and utilized that makes the digital economy run is much the same for Visa as it is for cybersecurity and enterprise compute in general. For most consumers, when you think of Visa, you think of a card that you have in your wallet. Maybe it's a debit card or a credit card. You tap it, you use the chip in it, and your money gets moved from your bank account to the merchant's bank account. Whoever you're transacting business with, it goes to their bank account. Much of that is accomplished via Visa's private data centers and private networking infrastructure. There in the bottom left, they do utilize some public cloud data centers as well, but you can largely think of Visa as the connective tissue, the railway, so to speak, between consumers, mobile users, and merchants and their banks, and helping facilitate money movement back and forth. Because ultimately, you can think of money and business transactions as nothing more as information technology. A transaction is really just a type of communication. And so Visa, as such, is very much an IT company. What does that infrastructure look like exactly? They do have some private dedicated data centers that they own and operate. Some very high level statistics: over 3 billion Visa cards, millions of merchant locations, nearly 17,000 financial institutions worldwide, all connected into Visa's private data centers. To connect all of those users at the network edge, and as well as all those merchants operating at the network edge, as well as e-commerce sites, banks, other financial institutions, Visa has 4 private data centers, 2 in the US, 1 in the UK, 1 in Singapore, and over 10 million miles of actual private telecom network cables that connect it all together. Visa boasts that's enough cable to wrap around the world 400 times. Impressive. And what does Visa pack into those data centers? The latest generation mainframes, servers, and of course, whenever you have these big, powerful supercomputers, you need equipment that cools everything down, and you need to have software that helps manage it all, cybersecurity that runs atop it to make sure that no unauthorized access is happening into those data centers to tap into that data, into those transactions. And these data centers and the equipment running inside of them are ultra efficient. Visa's network can handle tens of billions of transactions every single quarter, well over 100 billion per year and counting. This is an incredibly extensible and scalable network, which you'll be able to see in just a moment in the financials. This is ultimately why we call Visa a business model worthy of imitation from other IT companies, especially IT infrastructure providers like public cloud and private cloud providers, for example, that operate and engineer and build data centers for their customers. So think companies like AWS, Microsoft Azure, Google Cloud, Oracle Cloud, and others. Visa has actually been developing a business model like this. Again, a type of railway that facilitates computing transactions about business and finance for decades. So oftentimes we'll look at a company like AWS, which is fast approaching $100 billion in annual revenue. Pretty incredible given that AWS business housed in Amazon is really only just over a decade old. As it continues to mature, it can continue delivering some incredible financial returns for shareholders over time. Visa, of course, has been in existence long before it actually had its IPO in 2008. But you can see just the stock price alone up well over 1,000% since then. Rain or shine, good times or bad for the economy, Visa has continued to chug higher. And driving that stock price are those incredible revenues, but not just the revenue, the operating income. Yet you're looking at that correctly. They're at the tail end of 2023 operating income, about $6 billion on just shy of $9 billion in sales. This company churns out operating profit margins of over 60%. And that's not just a one off, that's basically the standard for Visa every quarter. Really high profit margins. And the reason they're able to do that is the ultra efficient way they have been able to build out those data centers. You can see the very tiny capital expenditures line item, typically just a few $100 million in capex on property and computing equipment, primarily computing equipment that they need to buy to keep those data centers up to date. But the amount of cash flow, free cash flow that they're able to generate off of those assets, really incredible. Several $billion per quarter, even in a fairly pedestrian quarter, at least $3 billion in free cash flow these days that Visa is able to generate. And like any good, mature, but still growing business, what Visa decides to do with that free cash flow is really important. So Visa currently in their fiscal year 2024, the second quarter of that fiscal year just ended in March 2024. So through the first half of that fiscal year, you can see 7.6 billion in free cash flow, which they turned around and returned completely to shareholders via share repurchases and dividends. And in fact, just over 8 billion returned. So they dipped into the balance sheet just a little bit. They clearly see some value in repurchasing stock right at the moment. Nearly 6.1 billion in stock repurchased, 2.1 billion worth in dividends. That, of course, it does ding the balance sheet just a little bit. You can see cash and investments just shy of $18 billion, total long-term debt of $20.6 billion. So a bit more debt than cash and investments. But again, given the amount of free cash flow Visa is able to generate, they can allocate cash to those share repurchases or scale back on those and let a little extra cash accumulate on the balance sheet, depending on what they see as a good value for their stock, or if they have other uses for that cash, like via the occasional bolt-on acquisition. The growth story, of course, far from over. Net revenue in Q2 fiscal 2024 increased 10% year over year. GAAP earnings per share increased 12%, again, thanks to those stock buybacks. On an adjusted earnings per share basis, earnings per share grew 20% year over year. And the mix of revenue that gets us to that 10% increase, the volume of payments on the Visa network, utilizing those data centers and those private telecommunications cables, payments volume continuing to rise at a healthy high single digit increase. And then cross-border volume, so movement of money across borders, still at a mid-teens percentage increase. That is a big growth opportunity for Visa in the years ahead. A lot of business to business and big enterprise spending still makes use of some legacy networks, basically moving cash. Still lots of growth for Visa to move more of that massive amount of volume over onto its own private network. So I promised we would briefly touch on Visa's cybersecurity, analytics, and some other stuff here listed in this middle bar that grew 37% year over year in Q2. Consulting They also have some cryptocurrency services lumped in there as well. Still a pretty small segment at 756 million in the quarter, kind of a catch-all basket of all sorts of Visa services. This is where you'll often see them make some small little bolt-on acquisitions. They have the data centers built. They're ultra efficient. Oftentimes they can buy these things, plug them in to their existing compute infrastructure, and then offer some sort of cloud-based service, either to their financial customers, their banking customers, and increasingly to the IT community as well, especially fintech, financial technologists that are working on building some next gen applications. So nice little tuck in acquisitions that happen on occasion there that feed into the security and analytics industry. 37% year over year growth for that small segment. Again, all just simply feeding into the fact that Visa is still a growth business. So in Q3, which ends in June, company expecting low double-digit percentage year-over-year growth. So expect somewhere in the ballpark of, say, 10 to 13% revenue growth. And for full year fiscal 2024, which ends in September of this year, low double-digit percentage growth compared to 2023. Maybe we can continue to get some profit margin expansion over time, primarily where we will get earnings per share growth on top of, and in addition to what's delivered via net revenue growth, is those share buybacks. So for full year 2024, earnings per share expected to grow at a low teens rate as well, maybe just a little bit higher than the net revenue growth. Another solid year for Visa. This company still cranking out the expansion at a steady pace like clockwork. What often comes up, though, when looking at a business like this is the valuation. Currently, as of this recording, Visa stock trading for about $280 per share, which puts it at about roughly 34 times trailing 12-month earnings per share, or roughly 30 times trailing 12-month free cash flow. Even if you look at this stock on a forward-looking basis, based on the outlook Visa itself has provided for earnings per share for this year, shares trading for 28 times expected earnings. The simple argument against this one always ends up being it's expensive. It's not a high growth business. Shares are expensive. Pass. I'm taking a pass on this one. As you may have come accustomed to seeing from us, though, we like to try to break down why a business might trade for a hefty premium over and above the stock market average, like Visa does. So we're doing a reverse discounted cash flow method here, DCF, reverse DCF, to see what is the market exactly expecting out of Visa on a go-forward basis to get us to a fair value of roughly $280 per share, which is approximately 550 billion market cap. Here's the assumptions that we've penciled in to get us to 280 as a fair value price to pay. So trailing 12-month GAAP earnings per share is at $8.94 after the Q2 update. If we assume GAAP earnings per share growth of 15% for the next 2 years, and then Visa's earnings growth rate drops to just 6% thereafter into perpetuity, just a skosh over the IT industry average of roughly 4 to 5%. We use a discount rate of 10% on that earnings growth. That gets us to a fair value of about $280 per share right now. So is this an expensive stock? Sure, it does have a premium. It is above the average for the S&P 500, to be sure, but there's good reason why. Visa has a long track record of delivering very strong, profitable growth for shareholders and returning lots of cash via a small, albeit small, dividend, yielding less than 1% a year right now, but it's a growing dividend, and lots of share buybacks. How do you use something like this? Look at these growth assumptions using a reverse discounted cash flow, and then decide if you think this is an easy hurdle for Visa to clear or not. This is one of our oldest holdings here at Chipstock Investor, so we're not adding at this time, but we're more than happy to continue holding. We think this is a reasonable expectation for Visa. That will do it for this update on Visa. This is meant to be a primer on the business model and how it works. Again, a type of railway for the digital economy, connecting one of the largest communications there is in existence, digital transactions, movement of digitized money. Do some digging on this one if you're not familiar with the company, but this is a fantastic business model that we believe is a goal, a standard for lots of other cloud computing and IT infrastructure businesses as they continue to mature in the decades to come. Make sure to check out our membership here on YouTube as well as Ko-fi. It's just $5 a month. That gets you access to our Discord chat where we share all of our show notes, answer questions about business models, talk a bit about what we're buying and why. We've got a great community over there. Or if that's not your thing, we do offer most of our show notes over on our Ko-fi shop on an a la carte basis. Check that out. Thanks again all for listening and tuning in. Casey and I will be back real soon.